Acceleron Learning, life experience accelerated. On deck right now, financial literacy and banking 101. Hello and welcome. I'm Chris Mykoski. This unit describes the basics of consumer banking. Specifically, we will discuss the theory of money, different types of banks, and the services they offer, as well as practical tips for managing your personal banking matters. Banking around the world is highly regulated. Global standards were set by Basel II, a set of standards which was published in 2004. Basel II set the international standard for risk and capital management requirements. Specifically, Basel II set requirements for capital reserves for parties engaged in international activity. The U.S. Central Bank was created by the United States Congress and is governed by the Board of Governors of the Federal Reserve System. Commercial banks are regulated by the Comptroller of the Currency. This was established under the National Banking Act of 1963 and serves as the administrator of national banks and is a division of the U.S. Treasury. Commercial banks are also regulated by state banking laws, such as the Texas Department of Banking, which charters, licenses, and regulates financial providers in the state of Texas. All 50 states have similar laws governing banking activity within their states. And of course, the federal government has additional involvement in banking activity through the Federal Deposit Insurance Corporation, or FDIC, which is an independent federal agency established by Congress in 1933. This agency insures the deposits of commercial and savings banks. Depositors are not required to purchase deposit insurance. This is a service provided by the bank, so the banks pay the premiums. Finally, there are savings banks. These can be chartered by either a state or the federal government. The insurance responsibility is shared by state and federal governments, and generally their investment activity is limited to first mortgage loans. Deposit insurance on savings and commercial banks and credit unions is provided by the FDIC and the NCUA, or National Credit Union Administration. And the Internal Revenue Service, the IRS, gets involved too. Interest earned by depositors is taxable and reportable. These earnings will be reported to the account holder and the IRS on Form 1099 INT. When we come back, we'll look at the types of banks that exist and the services that they offer.